The latest research by Discovery reveals that millennials are faced with complex challenges. This contributes to the widening of their insurance gap, estimated now to be around 15 trillion rand. Head of Market Insights at Dicovery Life, Mc Currie, joins us now. Millennials between 18 and 34, most of them not taking out life insurance. Why is this happening?
Correct. I mean, I think when you look at why people aren't taking out life insurance, especially in that millennial age group, I think there are a couple of factors really contributing to it. I think when you look at it, it's kind of a combination of attitudinal traits. So, for example, quite short-term biased when it comes to making decisions which rather reflect your ability to get benefit today as opposed to looking to the future. I think affordability is also a key concern within this age group. So I think a multifaceted reason why they're not taking enough insurance within the insurance space.
When you look at South Africa's young people, you see that there's a lot of unemployment, there's debt, and also responsibilities for those who do have work. So a lot of social issues there. How are insurance companies, packaging life insurance for them to be more affordable for them?
I think that's a very important point. I think when you look at the need for insurance in this age group, I think the points that you mentioned are exactly correct. When you look at this group, generally there's very high debt that they're having to deal with, their family responsibilities. And I think also within this age group, the thing that's often forgotten is you're at the beginning of your earning potential. So there's a massive need to actually protect your future income. So I think it's a huge responsibility on companies to provide for this age group, and affordability is a key concern. So I think really when you're looking at it, companies I think are at the moment trying to make sure how do we balance affordability, but at the same time making sure we provide adequate benefits, because that's always a trade-off. It could be cheap, but is it going to provide the correct benefits? Let's
look at those that are employed. If we compare them to those that are getting out of the job market at around 50, 55, 60, what is the insurance gap between the two?
So, I mean, when we estimate the insurance gap on our latest research, we find that if you're looking at the 30 to 34 age group, really that millennial group, you're only probably finding that they're only insured for about 15% of the actual need. So that's about 3 times underinsurance when compared to 50 to 55-year-olds. So I think while underinsurance is relevant regardless of which age group we're talking about, really that young millennial is facing the biggest challenge in the South African sphere.
Is it instant gratification or you only live once attitude? Because they do take out insurance on phones, or rather I should say we do take out insurance on phones, on cars, and things we do own, but not on our lives.
And I think it is. I think there's some kind of form of instant gratification in why we choose certain insurance to take. So, for example, cell phone, we all can imagine losing our cell phone, but I don't think we can all kind of estimate the true present value of losing your income. I mean, when you look at the stats, it's quite scary. So if I consider, for example, a 25-year-old earning 20,000 Rand a month, if we would actually project what they expected to earn over their working life, it's about 18 million Rand that they would need. So I think it's difficult for most people to actually quantify how much their future income actually means to them.
At this point, in terms of saving up for pensions, South Africans are not saving up enough. And in terms of life insurance, what could be some of the dire things that could happen if somebody perhaps died at 35 and they weren't, preparing themselves for that to happen?
I think once again, normally the burden obviously of death falls on your family. I think that's a scary part. So especially within this age group, not only is it the fact that you have to support your family, your actual kids and your spouse for argument's sake, but also actually generally you're supporting your parents as well. So the consequence of not being properly insured is that the people that you left behind have to actually decrease their living expenses to do with what they can. And I think that's a situation none of us want to be in.
Another interesting point about millennials is that they start families very late, and of course, if you don't have a family, then you're not looking rather at saving up for life insurance, disability cover, and things like that, because you're only looking out for number one. So why is it that they're taking so long to get into that mentality of starting a family?
I mean, I think that's an interesting worldwide trend that we've really seen, that people are getting married later, they're having children later, and I think really what that means is the consequences. I think they're putting off that decision for financial planning. As you said, it's kind of that thinking of, I'm the only one who's important at this point in time. I'll think about a family and my correct financial planning in the future. So I think that's something as insurers we have to kind of combat, the idea being that we need to make sure that insurance is relevant and actually attractive to you before you have kids, before you normally would feel the need to take insurance.
What are insurers doing about this kind of information and this dire situation? If I look at it and the numbers that you've told us about now, what are some of the solutions that insurers are coming up with?
And I think it's the right point. So insurance actually is a solution for it. So like I spoke about earlier, if you're not correctly insured, the kind of consequences, you have to reduce your expenses. And generally when I talk about reducing expenses, it's about 40% to 50% after claim that you would have to drop your expenses by, or your family would have to drop them by. So really in the market, if you look at it, we're trying to design products that not only meet the relevant needs, but are affordable to members. So the one product that we've recently introduced is a Smart Life Plan, where we try to balance providing adequate benefits to them, so tailored benefits, especially when it comes to actually protecting your future income, but at the same time trying to take into account that we know they're present biased, so how do we design a product which uses features that get them to change their behavior today, but actually still get their long-term financial goals met.
Thank you very much. Scary thought there. That was the head of market insights at Dicovery Life, Mc Currie.